Welcome back to your channel. My name is Brad, and today's Sweet Tea. Sweet Tea, we're going to do it in one shot. Hopefully I can get through this without doing a whole lot of editing and get you on your way and having a great weekend. So, if you're new to the channel, I'm Brad, and I am a couple months into retirement. And my whole goal is to live off of 8% of my portfolio. I'm going to be making income, and I should say 8% of what I have invested in income, because I also have invested in the S&P 500, QQQM, Berkshire Hathaway. So I have other funds, but what I have invested in income, I want 8% on my money that I can withdraw at a reasonable pace so I can live off of it. I did take a little distribution the other day. Actually about 2 months worth of distribution, but hey, that should get me almost to Christmas without too much issue. So life plans for Brad. I never shared this, but here's a picture of the RV. This is what my wife and I will be moving into in March. I can tell you that we'll be on the East Coast at the beach for 8 months in the RV. Yes. We've already signed the contract for the spot. We're looking forward to it, but we're going to sit where we are until March. That way we know what's going on and we're not freezing to death. We have lived in this RV when it was minus 10 degrees outside for 2 weeks, minus 10. So we know it can be done. You just had to wear some sweatpants. Inside the RV was 65-ish, but we can do without that. So we'll see how it goes. It should be a great time at the beach. We lived in this RV already for 5 years. We got this apartment because we wanted a little time off the road. What we'll do after our contract's up at 8 months, don't know. Will we move south to Florida or Georgia, someplace like that for the winter and then go back there? I have no clue. We're going to just wing it. But overall, we like the RV life. We just don't like moving all the time. So we're going to sit someplace for 8 months at the beach with feet in the sand. And I've looked at videos of the campground and it is looking awesome. But you don't know until you actually get there. Those are just my thoughts on where I'm going in my life and what we're going to be doing in retirement. I'll still be making videos. It's just that the background might be the beach, or the waves. So, don't get too mad when you see the beach every day and be like, man, that guy knows what he's doing. No, I don't. I'm winging it. So I did a video yesterday on my thought process of reinvesting into cover call ETFs. And I'm sitting there going, why am I reinvesting into cover call ETFs near the market all-time high? It's killing me. I want to lower my cost basis. So I'm sitting there going, when I was getting, my growth funds, I watched that 200-day moving average and got out of the market at a certain time with a certain percentage. And I'm going to say probably my equity side, the ones I still have invested in the S&P 500 and QQQM, I probably will do that just the inverse. Really, the inverse. So sell those as the market's going down and buy them again later, and then buy more cover calls. Just the inverse. So I want that part to continue to grow, but I want my cover calls price to go down as a cost basis, and we'll see how it works. I think it's a good strategy, personally, because you can't guess the bottom. You can come close, but you don't know where the bottom is. That's craziness. Now, on that craziness, somebody sent me this whole Goldman & Sachs the market is going to be lost decade. Okay, so here's my thought on the lost decade. All right, pass the doobie around. Everybody can smoke it. So Goldman Sachs was only off this year's forecast year to date by 14.7%. So they're calling for 3%, but they were off this year by 14.7%. And you can see where these guys are. Got the chart up for you. You can see where they're at. All honesty, I think I can almost guess as well as they can. Just throw it out. I mean, we're paying these guys how much money to do this? And they can't get anywhere near the right number. Just thought I'd throw it out. Hey, so don't worry about it. That's why we're income investing. We're not worried awful much about the market going up and down. We want it to go down so we can lower our cost basis. And then we want it to go back up. So it's all gameplay. But that's my thought on the market. Now, I did join Steven's group inside the Incomefactory. So it's an interesting group. I haven't posted anything in the chats. I did send Steven a, thank you, welcome message. And he responded, which is awesome. And it's great to see the community learning different things. Learn that, holy cow, I'll just throw this out. Steven doesn't have more than 3% in anything. I mean, I thought I was doing good at 5. He has 3. And it's just like, you got 80 plus funds here. Holy cow. But I guess that's what you do in retirement, that he has nothing else to do, besides maybe, his enjoyment of life. So he's got 80 some funds. So I'll be looking at them. There's some interesting funds that I might get into, might not. I'll do reviews of them and back test them for everybody so you can see the back testing. And then I'll tell you, hey, I'm taking a 1% into this fund, all right? So it'll be fun. Lots of material to cover. He does a great job. He does a really good job at explaining why he's getting in and getting out. And there was some funds in there. I was like, oh, I can't believe you're actually in that fund. But hey, if Steven's in it, take it with a grain of salt. Now, he brings up a lot of thoughts and processes, which was very interesting. So, treating something like an annuity, treating it as you have to reinvest back into it and take off your 8-10%, but reinvest back into it. So he gets what he's getting into, and it's awesome. It's really good to see other like-minded people in the same group. And, it's a large community, and I bought it for the year, and he has core stuff. I'm going to be looking at each one. I will be looking at the core first. Then I'll look at his individual portfolio. He shares out what his percentages are. And there's stuff there that I may or may not get into. But I'm looking more for senior secured loans and some bonds. I think those are interesting, especially you get up over 9, 10, 12%. And it's a senior secured loan. And, that's fairly stable and it's good income. But we'll see. We'll see what I get into. I don't think I'm going to be getting any more into cover calls. I think that what I have, I'm going to move it around a little bit. But I don't want to invest more capital into cover calls when there's all this other good stuff out there. The CLOs are coming next week. I've read Steven's Beginner's Guide. I've read most of the book so far. I think I'm going to give a little beginner's guide to CLOs, and we'll call it good. And then we'll review some CLOs and look at how they function and what kind of returns you will expect. I'll be posting a video after this one on just like I did yesterday with Stevens. It's going to be an article read to you, and it's going to be one of the funds that I actually own. And some analyst looked at it and gave your thoughts and his thoughts. And you'll listen to it and say, wow, that's so I like that. And I like it how Seeking Alpha, somebody said, hey, it's really good that you read that and it wasn't an artificial intelligence. I hate to say this. That's actually AI. I'm not reading it. That's somebody in AI world reading that, and it really, really sounds like a real person. But they're a big company, and they have the money to afford really good AI compared to people like me and using free stuff off the internet. It sounds like, terrible. Just I don't know what bad words I can use, so it sounds bad. So that's my thought on that. I'll post it later. It's on EIC, and they also go over some other closed-end funds and some thoughts, their thoughts. Not my thoughts, their thoughts. But I wanted you to hear it. I'm out of free articles. I'll post the article in that, but I only get 5 free articles every month that I can post for free. But I'll post the article, so if you're a Seeking Alpha member, you can actually just go read the article instead of listening to the whole thing, or you can listen to it, one way or the other. So in the thumbnail, I brought up something about gold. And I saw this the other day, and somebody's asked about gold, and I continue to look at it. Don't have any invested in gold. I will tell you that there's going to be a fund coming out probably later this year that's based on gold that I'm interested in. We'll see. That's all I can say. We're going to see. I don't know if it's something that I'll be getting into and not getting into, but my sources have told me it's coming out. It's told me it's 1.5 leverage, and it should be in the mid-low teens for a distribution rate. So we'll see. See how that one goes. But gold, is it overpriced? So an analyst looks at it and say, hey, if we look at all these other metrics, median house price, look at S&P 500, look at the US index, M3 money supply, monetary base in the US in billions, now gold is not overpriced according to them. That's, again, a comparison. Gold used to be right around the same ratio as the cost of a house. If you didn't know that, it used to be you could have X amount of ounces in gold, and that was about the same price of your house. And then as housing prices would go up, gold would correspond to those prices. But that is not how it's working today. They're lagging significantly. So that's one bit of information on gold. The other bit of information is international gold reserves are clearly increasing. And you can see the graph. I'm just giving you the graph and showing you how it goes up over time and where they are compared to the average. More information for you to make decisions on your own. Not telling you what to do, what not to do. But hey, gold goes up over time. I think it's probably a good bet, but I'm not investing in gold because it doesn't really give me income until that new fund comes out. I don't get into gold miners because gold miners is a different aspect, and I've been on some real gold mines, and let's just say it's not what you think. Just throw it out. It's not Gold Rush. The gold mines I went on were not Gold Rush in the Yukon. Just saying. That's not how they were mining gold. And the process is very intense, and then it becomes non-intense. So it goes from thousands of people to a skeleton crew for the next 10 years. It's a feast or famine, one of the two. At least that was the gold mine that I saw out in Utah and Nevada. They were digging and piling it up and throwing acid on it and extracting the gold out of the dirt. It was interesting. Very interesting process, but very labor intensive. So the other one I want to throw up is bull market. So the markets and consecutive days of the S&P moving less than 1%. And I look at this and say it's an interesting chart, especially when you compare it to the NASDAQ in consecutive days with new lows and new highs. I feel that we will probably be seeing more volatility in the near future. Just thinking that we're going to see more volatility. We're going to see some red days coming up. Of course, I like red days. In SPY T, I'll probably take a little bit of money after the distributions and it catches back up again and move it around a little bit in my portfolio. But, not selling it all, just, de-risking a little bit. I kind of looked at Stephen's philosophy of 3% instead of 5% and said, maybe Stephen's right. Maybe I can learn something from somebody that's been retired longer than me and say, maybe 3% is a better average than 5%. So maybe, we'll see. We'll just go with it. What's the worst thing that could happen? I move it around and I go into a lower fund that's paying 14% instead of 20%, but the 14%er tracks the S&P a whole lot closer than, I don't know. Who knows? But we'll see how it goes. What's the worst? Like I said, what's the worst thing that could happen? That I miss out 1 or 2%, but I still get my 8. Not overly worried about it. So the next one is going to be central bank balance sheets. And you can see the Federal Reserve is lowering their balance sheet as of now. Just keep that in mind that they can adjust that balance sheet anytime they feel like it. But China is increasing their balance sheet. So globally, we're going up. Just the United States hasn't really participated in, that portion of the market. And we'll see how it goes. This definitely affects what's going to come into play with Bitcoin. And I love Bitcoin. Small percentage, but I want my percentage generating me income so I can take off my 8%. But beyond that, all good. Still holding Misty, $4. $4. And once it becomes house money, I'll take my original investment out and almost treat it like an annuity. Take half of what they pay me, put the other half in, and I think I could literally, at the pace that they're going, it could be 5 or 6 months before it's all their money. And then who really cares? Like, all right, let it go to 0, but pay me for the rest of my life. Just saying. A little bit here and there. So TLTW, I didn't get back into it. It did a double bounce at the bottom. I look at it. I looked at Stephen's portfolio. He doesn't have it in there. I just throw that out for conversation. But why did I not get back into it? Because I still believe in it. It's 15% on treasuries. And what you're going to probably see is inflation affect it more than the rate cuts. And here's an inflation number. This is a prediction of inflation. So the green line is old inflation numbers from the CPI inflation, and the red is current. And you just look at that going, could we be headed towards higher inflation numbers in the future? Don't know. But I look at that chart and say, not worth the risk. Not worth the risk. At least not for Brad. I getting great fun, pays me what I want. I can still yank off my 8% and call it good. But no, not for me. Global market investors. So this was always something that you think about. You got the BRICS coming out, and will the dollar lose the dominant effect? And what you're seeing is the US dollar is still pacing or outpacing the euro, which is interesting. You would think the Eurozone being as big as it is, the US markets are definitely dominating, and we're not seeing that transition yet to something else. I'm a little bit skeptical about central bank digital currencies, because then they'll be able to print money without you even really knowing that they're doing it. Be careful out there. Invest in assets that are going to go up in price. I saw a newsletter the other day that said you should live on 10% of what you make. I giggled. I giggled a lot because, Brad, being so cheap that he still poops diamonds. I still haven't figured out how I'm going to claim that on my taxes yet. But get in there, scoop them out. I know it's nasty business, but man, just can't flush the diamonds down. You take those diamonds and you go sell them, right? They're saying that they're pretty worthwhile. Actually, I don't poop diamonds, but that's a good saying. But I might go diamond hunting. Down in Arkansas, there's a crater that they plow every now and then, and you go in and pick up the little stones and you find diamonds. It's always something fun to do, especially in retirement. What else do I have to do? But the US dollar is still becoming dominant. I like that as an American. Sorry for the Europeans. But hey, we'll see how it goes over the next few years. And, live life as we mean to. That's it for this week's video. Look for the other video about EIC. And we'll talk to you later. God bless.